Monetary system is the Titanic, okay? And that may be extreme, but let's just hypothetically, as a model, say the monetary system is the Titanic, and gold and Bitcoin are the lifeboats. So I got a seat in the lifeboat for $400 in my first Bitcoin purchase, or 50,000 with my last Bitcoin purchase. Now it's 100,000 to you. What do you want to do? You want to stay in fiat, or you want to buy that seat?
Today, I'm excited to welcome Larry Lepard back to the podcast. Larry is an investment manager, sound money advocate, Austrian economics, and the author of the newly released The Big Print. Welcome back to the Bitcoin Age, Larry.
Yeah, thanks, Paula, for having me back on. I really enjoyed our last conversation. I'm sure I'm going to enjoy this one too.
Yeah, I'm really looking forward to chatting about your book. I really enjoyed it. It was really easy to read.
Great.
And it covered everything. I have to say, for me, it covered everything in a very personal way. So I enjoyed that. Tell us a little bit about your personal reason behind writing the book and what you hope.
Yeah, well, obviously, I hope the book goes viral. My personal goal is kind of to orange pill the entire world, as we were joking before the show, a modest goal. And, if I've got a smile on my face today, it's because I feel just an enormous relief having it out and being able to see it. The whole process took longer than I thought, was harder than I thought. So here it is, and I've got it, and it looks good. So I'm very pleased with that. So your first question, why did I do it? I've answered this on the pod, but I get into the details on it here. I guess at my age, I looked around and I see where this country's at, and I see all this dysfunction and all the things that are broken, and it really bothers me. I mean, I feel like I grew up in a country that was better than the country we're living in now. I mean, we got more technology now, but the middle class has been destroyed, and everyone's suffering from inflation, and the little guy is just getting creamed here, and doesn't really necessarily know why. So I was inspired by, I saw a political program where the blue team was arguing with red team, and it was just so dysfunctional, and nobody was talking about what to me is really kind of the underlying issue, which is the money being broken, the monetary system being set up to screw people, so to speak. And I just thought somebody needs to tell this story in a way that every man will understand or every woman will understand. And so as I was writing it, I tested it on people. Do you get this? Do you understand it? Because I didn't want to write some heavily technical Bitcoin book that people would be afraid of. I wanted to write a story that explains how and why the system has been constructed in a way that people are getting hurt. And it doesn't have to be that way. It was different when I was younger. It was different when we were on the gold standard. It wasn't perfect, but it was better than it is now. Things have gotten much, much worse. And I thought there was maybe a hole in the marketplace for where this might fit. I mean, there have been some fabulous Bitcoin books written, and I've borrowed from many of them. And, I really kind of consider this book to be a team effort. I mean, everyone on Bitcoin Twitter, podcasters like you and others, Lynn, Safe, Jeff, people who've written fabulous Bitcoin books. I mean, they're all in there, and I borrowed from all of them. And really, what I see myself as, I'm a good conductor. I've kind of pulled together all these things and tried to put it into a Reader's Digest format so that you could know nothing about monetary policy. You could know nothing about inflation. You could just be living your life, but knowing that something's not right, feeling that the system is broken. And I think if you read this book, you would get a much better understanding for how and why it's broken. And then, so as not to be too negative or discouraging, the second half of the book, as you know, it's broken into two parts. Part one is the problem, part two is the solution. I try to constructively lay out why it's getting better, and it's going to continue to get better. And we can all make it get better faster if we do a certain thing, which is to buy and support Bitcoin. So that's really kind of the genesis of it. And, I'll consider it successful, not really if it's liked in the Bitcoin community, because I think most Bitcoiners will like it. But what I'll consider it successful is if average people who have no idea this issue exists pick it up, read it, and say, "Oh, now I get it," and it changes and improves their lives. I mean, that's what I want to see happen. I want to help average people live better lives.
Yeah, and that really comes across in the book. And I really appreciated that. So, yeah, I couldn't get my friends to read the Bitcoin Standard, but I'm going to try with your book too.
We'll see, right? That's the test. I don't know how it's going to do. I mean, I had a lot of help. First of all, I had a fantastic editor named Mel Schilling. I mean, I can't write this well. She can. So with my ideas in her language, we got it done right. I had a great agent who actually came up with the idea for the title, The Big Print, and then suggested I put the opening scene up in the beginning, which is kind of a shocker, a good way to open the book. And then I've had a lot of other help. I mean, my wife helped me. She suggested several chapters. Several people started reading that said, "What's the Federal Reserve?" Okay, I better describe what the Federal Reserve is. It's really trying. I'm really trying to help the world understand what's wrong with the monetary system, and then understand, what the way out of this problem is. That's really was the goal.
Yeah, and we're going to go into that a little bit more. Before we get there, Trump proposed a sovereign wealth fund this
Yes.
week, and David Sachs says they will look into adding Bitcoin. How do you think this will affect Bitcoin adoption? And is it centralizing it a little bit?
Well, yeah, that's a great question. So I think it's a net positive for Bitcoin adoption. Central banks, or I mean, governments wanting to buy Bitcoin, and we've already seen some of this. Obviously, El Salvador took the plunge. When I was in the Middle East at a conference last year, I learned that UAE, Oman, and Saudi Arabia are all buying Bitcoin. It's a smart thing to do. In the Bitcoin community, there's some division. Some people don't like this. They're anti-statist and they don't want the federal government being stronger and buying Bitcoin. And the way I view that is, I get that thought. So I'm of two minds here, but I also would rather have our federal government be stronger than the Chinese and the Russian federal governments, because I think we've got a better, for all the flaws in our system, I think it's better than theirs. So, and yeah, the fact that they're buying Bitcoin, I think it's a huge positive. I think Lutnick is going to push Sachs very hard to do it. As we know, Senator Lummis is trying to get a bill through that would almost codify that they have to buy a certain amount of Bitcoin every year. And I think these things would all be net positives for the United States. I mean, Jason Lowery wrote a book on this, talking about how, basically, if the U.S. Is a first mover in using this as a form of storing our wealth, that it will advantage us versus other countries. And I think he's right. And he even pointed out to me in a private conversation that, the CIA and the Pentagon, they get this. I mean, Bitcoin's a strategic thing that we should all be striving to own more of. So it's all good. I mean, there's some noise along with it too, though. I'm not a big fan of everything that's not Bitcoin that's called crypto. I'm not saying that every single crypto is bad. There's some legitimate use cases, but many of the other cryptos are bad. In my view, they're just kind of pump and dump schemes, and they've taken away from the message of Bitcoin. So, take, for example, this XRP, which I think is just completely worthless. And I think the people who run it are evil. And I know they're trying to get into that strategic reserve, and I hope that doesn't happen. But look, it's a big step in the right direction in my view, and I couldn't be happier that it's taking place. And I know some people are disappointed. Well, they didn't go far enough. Well, look, a year ago or 2 years ago, we didn't even know if the government was going to support Bitcoin. I mean, I had people saying to me, "Oh, they're going to outlaw that," and then in January, the ETFs got passed. So, we've gone from the government being hostile and nobody really being interested in it to a presidential race where it was an issue, and Kennedy supported it and Trump supported it, and now an administration that's taking steps to support it. So these are enormous positive developments, and nation state, fear of missing out, FOMO, might be on the way, right? I mean, if we really do start to add to our reserve of it, other countries are going to think to themselves, maybe I should be buying that instead of gold. I mean, historically, what these other countries have been doing, and there's some big numbers out this morning. Central banks around the world have been buying gold. I mean, we're in a sovereign debt crisis, clearly, and the book talks about that. And in light of that, the right thing to do is buy money that they can't print. So the two choices are gold and Bitcoin. And the rest of the world, more than not, has chosen gold. China has chosen gold, Russia has chosen gold, and other central banks have chosen gold. And that's all fine. I mean, I'm not, I come from the gold world, and I'm a gold fan, but I think Bitcoin's a better choice for the reasons described in the book. And I think if the U.S. wants to maintain its position as a leading country in the world, we should be buying Bitcoin. And arguably, I mean, Loomis said, "Hey, we should be selling the gold." I think that's a pretty interesting idea. I'm not sure we have it. We're supposed to have 261 million ounces, but it hasn't been audited since the 50s. So there's some question. Ron Paul told me he doesn't think we have it, so that's about as good an authority as I can get. So,
Yep, I've always wondered about that.
yeah.
And also, we can't stop the government buying Bitcoin. So, in the meantime, that's exactly what your book is here for, is to help everybody else understand. And if the US government's buying Bitcoin, maybe we should too.
Well, I think that's right. I think that's absolutely right. I mean, it's the most asymmetric bet I've ever seen, Paula. I mean, and I'm with Michael. It's going up forever. And speaking to many people, I say it's going to be $1 million a coin and then $10 million a coin. And they look at me like I'm crazy. I was actually at the New Orleans Gold Conference, and I said that, and I could hear the scoffs of everybody just thinking, oh, you're full of shit. There's no way that's not true. And I'm like, well, okay, but do the math, do the analysis, do the pattern recognition. I mean, to me, this is the internet in the early days. It's Google in the early days. There's a network effect model that's taking place here. And, I'm pretty sure that my grandkids are going to be transacting in sats, not dollars. But that's obviously years away, but maybe not so many years, maybe 10 years or 15 years away. So it's interesting.
Have you taken any backlash for being so outspoken? Even in the book, you
Yeah,
start with
yeah,
that.
I definitely have. There are plenty of people who oppose this view, and a lot of gold guys have gotten mad at me for kind of defecting to the Bitcoin camp. But it is what it is. I mean, it's just if you're intellectually honest about it, I think you have to conclude that Bitcoin is more likely to be the money of the future, the sound money of the future than gold. Which is not to say gold's going to disappear tomorrow. Gold's going to go much higher. Uh, Bitcoin's just going to do it faster. Paul Tudor Jones, a very brilliant hedge fund manager, has made billions of dollars by being smart about marketplaces. He said, "Look, we've got inflation in our future for sure, and when you look at the inflation game, Bitcoin is the fastest horse in the monetary debasement race." And I think that's a very good way of saying it.
And in your book, that's how you start. The problem is inflation. And I
Yes.
think that's great because most of us can understand the inflation. And then you go into money and Austrian and Keynesian economics. Tell us a little bit more about the problem.
Yeah, well, the problem is inflation, and it's been going on for a long, long time. It started all the way back in the War of 1812. One of the longer chapters that some people may not want to read is the history. It takes you through the monetary history of the United States in kind of an abbreviated way. Although even so, it's still a multi-page chapter, long chapter. We've continually debased our currency over the years. My favorite chart in the book is, I don't know what page it's on, but it's early in the book where it shows the inflation chart from 1800 to present. And it's really remarkable. You probably remember that chart. What happened in 71? I mean, we were on a quasi gold standard. It wasn't a complete gold standard; it was a gold exchange standard. But until 1971, there was a piece of gold backing, our currency, and the Federal Reserve was required to hold a certain percentage of its reserves in gold, and that got, taken away. But anyway, 71, when we went off of that, boom, inflation became a problem, and we really haven't solved it since. And now it's gotten progressively worse. I mean, as we all saw in the COVID example, they printed 40% of the money supply in a 2-year period. And that's why we're all hurting. I mean, I shop for my groceries, generally speaking, and I'm still shocked at what I end up paying every time I go to the grocery store. I'm sure most Americans are as well. It's stunning how expensive food is. Yeah, it's a problem, and that's why so many people are hurting, and it's terribly sad. It really is.
Yeah. Yeah. Inflation is definitely something I think everyone relates to. What I don't think people always get is that inflation seems to be normal for most of us as long as it's not too high.
That's right. I mean, that's the thing that again, I think my age gives helps in this particular thing because the world wasn't always this way. It's gotten worse, and so people kind of think it's normal. And I mean, Keynesians think, oh, you got to have at least 2%. And some in the book I point out, they were saying, well, we should change the target to 3 or 4%. Well, why not 5? Why not 8? Why not 10? I mean, it's just and inflation is how the average person gets hurt because they just don't know how to fight it the way that the people who have access to cheap capital and run the system and own assets do. And that's why the wealth inequality has just gotten so out of balance. I mean, there's another chart early on in the book where I talk about the problem, and you can see that, I think 1% of the country owns 92% of the wealth. I mean, this is just crazy. And, I mean, it's French Revolution stuff. And the middle class has just gotten eviscerated. I mean, and these corporate CEOs are making 40 million bucks a year. And, the working person barely can keep up with inflation if they can at all. So it's really out of whack. And obviously the liberals and progressives say, oh, well, this is because, capitalism is bad. Well, no, capitalism is not bad. Capitalism is very good. But what's bad is crony capitalism and a broken monetary system that tilts the playing field in the direction that gives all these people who are financially sophisticated and a way to beat the system. And they do it at our expense. I mean, if you look at the technology that's developed since the 70s when I was a kid, I mean, we all should be working 20-hour work weeks. I mean, it's just amazing how much technological advances we've had and how much, faster and cheaper everything is and should be. And yet that hasn't happened because all that wealth has been siphoned up to the top. And so again, it's a very unfair system.
Yeah. The name of your book is The Big Print.
Yes.
Does that mean who's ever in office is going to have to eventually print money?
Yeah, the math really kind of dictates it. There's a great Lynn Alden chart in the book that shows just how the base money has to grow. Otherwise, the debt structure collapses because you can't service the debts. And so we don't know exactly when. And, it could be in this administration, it could be in the next one. I don't think we're going to make it through 4 years without that big print happening. I think something's going to break and they're going to have to do it again. And what we've seen is that these things are happening more quickly, one after another. It took a long time from 2008 to 2019 when they pivoted. Um, you know, they're coming. They're larger when they do happen. I mean, in 2008 we printed $3 trillion, but it took 4 or 5 years. I mean, here we printed close to $5 or $6 trillion. Some of it came back, and it took 2 years or 18 months. The problem is getting more and more acute, and everyone and more people are recognizing it. And you see it really. The biggest place to see it, the biggest clue, is the federal government budget deficit and interest expenses and the way they're growing. COVID took the federal government spending up 30-40% very quickly. And the natural thought would be, okay, it was a crisis, if spending goes up, crisis is over, spending should go back down. Well, it didn't. It actually kept going up even more. And so, therefore you've got these big deficits, and this leads to what I describe as the debt doom loop, which most people are familiar with, but for those who aren't, when the government runs a deficit, it has to sell bonds to fund the deficit. The bonds go into a marketplace for bonds, which, based on supply and demand, suddenly have created more demand for money. And so interest rates have to go higher, all other things being equal, and that interest expense gets felt by the government, which makes for a bigger deficit, which, wash, rinse, repeat. I mean, it's kind of a negative feedback loop. It just gets worse and worse. And this is not that unusual for developing countries. I mean, if one studies history and financial history, and we've seen this before, we've seen it in Venezuela, we saw it in Weimar Germany, we've seen it in Brazil, saw it in China, Russia. I mean, there's a whole chapter where we talk about all the examples of debt crises. And I reference Ray Dalio's excellent book on the topic. What we haven't seen for a long time, if ever, is a debt crisis in the biggest country with the world's reserve currency. But we're behaving in the same way that all those other countries behave, which is to say, we're kind of like that family that is making the minimum payments on the credit cards, and then they try and get a new credit card with a new line of credit so that they can borrow against that one to continue making the minimums. And eventually, somebody's not going to give you the new card, and you're going to default. And that's kind of, I think we're kind of at that eventually point, or if not, we're very close to it. So, yeah.
When I was reading your book, and yes, I can see it was so well laid out with the proof from the past. But what I was thinking is we always tend to go back to fiat.
Oh, yeah.
We destroy one and then we start another one and say it was somebody else's fault. So
Maybe,
what's
you
the
know,
chances of Bitcoin?
Yeah, well, maybe. I think the issue is, I think if we truly do have a currency failure, which I think is a possibility, it's not a certainty. It depends on how we manage this, as I talk about. There are a lot of policy choices. I mean, there's no guarantee the U.S. is going to have hyperinflation, but there's no guarantee we're not. I mean, it's a possible. And if we do, nobody's going to accept fiat after that, right? I mean, and so as an example, in a big hyperinflation that was semi-modern, of course, 100 years ago now, was Weimar Germany, and their currency totally failed, became completely worthless. And they got a new currency, they got a new central banker, and they pegged the new currency to a combination of land and gold. And guess what? Inflation disappeared, and people trusted the currency. I think if they came back and said that if this currency were to fail, we were to have high inflation, the government would come back and say, "Oh, you know what? We're going to do a CBDC, or we're going to create dollar number two, and we promise this time we won't screw it up." My guess is people aren't going to trust dollar number two, because you screwed up dollar number one. Why do we now? If dollar number two becomes exchangeable for gold or Bitcoin, that's a different matter. That's sound money. That's a dollar pinned to a form of underlying currency that has an energy component to it that was created via proof of work, because you can't print gold, you can't print Bitcoin. So that's I think people will. I think this is. I was talking about in the book how this is a fourth turning. I think the issue of this fourth turning is what's money. Robert Breedlove's brilliant podcast title. And so we're going to resolve what money is. because the government has completely abused the money, and it's basically it's failing. And so, we're going to have to go to a new form of money, and it's going to have to be sound. And so now we can do that the messy way, which is to just keep running this down the track and pretending it doesn't exist. And at some point in time, there really is a big print, and maybe we even do head towards hyperinflation. I mean, if we get a blue administration and, we get Stephanie Kelton as the Treasury Secretary, and we give out universal basic income to everybody, and we say deficits don't matter, like all the MMT, I don't know how to describe them. They're beyond the pale in terms of their thoughts. If all those people get in charge, I mean, yeah, we'll have hyperinflation, no question. So, but hopefully before that, we can do a monetary reset. And encouragingly, in more recent news, Scott Bessent, who's now our Treasury Secretary, before he took that position, he said his largest holding was gold. He also said that he believes there may be a need that, he recognizes there's a debt crisis. He's not stupid. He knows it. He understands it. He recognized that there may be a need for some kind of a monetary reset. I think he even referenced the Bretton Woods, which was really kind of the last monetary conference, a big one in 1944. And he said, if that happens, I want to be at the table. Well, all of those things signal to me that that he might be aware of it, or that they are aware of it, and that there may be a way to constructively, deal with this debt and do a one-time reset, which would be painful and probably fairly inflationary once, a very big inflation burst, but then we'd be back on a sound money standard. And that's kind of my hope for outcome, the most optimistic outcome, if we have wise leadership that sees the problem. And again, the book was aimed, even at those people. I'm going to send them all copies. I don't know if they read it. I hope they will, because the book was aimed at trying to influence the discussion so that that's where we go, because hyperinflations are very messy.
Just seems that the US, the cleanest shirt in the laundry, hyperinflation, it just seems to me.
It seems impossible, right? Yeah, no, I agree with you. I mean, on the other hand, hyper is a very strong word. I mean, you could also just have very, very high inflation. And, when you have inflation, well, okay, what are you really measuring it against? You've got to measure it against some sound thing that's not inflating. And so we could just have 10, 15, 20% inflation for a bunch of years. The South American countries, all of them, many of them went through this. And in those cases, what you see is you know the currency is failing. I mean, the signals to look for are what's going on in the bond market, what's going on with the price of gold, and what's going on with the price of Bitcoin. Those are the three big signals. And interestingly, I mean, as we speak right now, Bitcoin's kind of stuck in a trading range between 90 and 110, which I think it'll break out of at some point. But isn't it interesting? Gold's hitting record highs, and there's gold's at 2850 and climbing. And a lot of people, in the gold world were like, well, okay, this 25, 26, it's not going to last. We're going back to 2000. Well, no, we're not. And, in fact, 3,000 is now in sight, and I can see 4,000, 5,000, 6,000, but that's all down the road. But my point is that, and I describe it in the book, this is kind of a mass event, Gresham's law. I mean, as more, it's kind of a common knowledge game, Paul, as more and more people become aware of this debt doom loop, which I'm describing, and you're now really seeing more mainstream people talking about it and saying, hey, we got a real problem here. I mean, Jerome Powell himself said this fiscal situation is unsustainable, which I was kind of stunned when he said it, because I thought like, okay, dude, fine. So how come you're enabling it? Do you know what I mean? I mean, the Fed's actions have enabled that. So as more people become aware of it, they choose to go to these assets, that can't be printed. I mean, let me just say that, one of the things I think is holding some people back from going to these assets is they're looking at them and they're saying, well, my God, yeah, okay, I get it. You bought your gold at 300, 500, 1,000, it's at 3,000. I can't pay that. Or you bought your Bitcoin at, 400, 5,000, 10,000. I mean, I bought at all these prices, 20,000. It's at 100. I can't pay that. And a friend on Twitter, a really good guy, reached out to me and said, Larry, the way you should frame this is to say, all right, monetary system is the Titanic, okay? And that may be extreme, but let's just hypothetically as a model say the monetary system is the Titanic and gold and Bitcoin are the lifeboats. So I got a seat in the lifeboat for $400 with my first Bitcoin purchase, or 50,000 with my last Bitcoin purchase. Now it's 100,000 to you. What do you want to do? You want to stay in fiat, or you want to buy that seat, even though it's 50,000. And same thing with gold. I bought gold at 300. Gold's at 2,800 now. Okay, great. You got to pay more than me. That's because you weren't in early. Fine. And by the way, it's been a rough ride from 300 to here. That was no piece of cake, because we went from 300 to 1800, then we went from 1800 down to 1,000. And it caused me a lot of pain. But my sense is that if these trends I'm describing of monetary debasement and the fiscal and debt doom loop continue, the prices are going to be much, much higher in the years ahead.
So it might be good just to get some.
It might be good just to get some, just in case, isn't? Yeah. Well,
What would you recommend if somebody said to you, would you start with 10% or
I
5?
would. I mean, I think it depends a lot on your age and your risk tolerance. I mean, I think I point this out in the book, and I think some Bitcoiners do a disservice when they just say, "Hey, go 100%," and they don't really fully explain to people the way that this thing can pull back. We've had 70, 80% pullbacks. I'm not sure we'll ever have one of those again, but we could have a 50% pullback. I mean, I tend to, we could not, but I tend to think, it might go to 300 and pull back to 150. I mean, I don't know. But so you've got to be, you got to have a long-term perspective, and you got to be prepared to deal with that. I think I said in the book that I think a realistic goal for most people would be to maybe have 25% of their assets in what I call sound money assets. I mean, obviously I'm much, much higher. Many people are much, much higher. If you're younger and you have a long time frame, I think you could be much higher than that. But I think if you don't have 10 to 20% in sound money assets, and we really do have the kind of currency destruction that I'm suggesting might occur, I think in 5 or 10 years, you might feel regret, that, hey, I heard about this, I knew about this, I didn't take action, because most people can stand to have, you can take 10% of your net worth and say, all right, I'm going to put in this thing that's risky, but that appears to be logically making sense. And, if we're right, I mean, I firmly believe that within a 5 to 7 year window, this $100,000 Bitcoin price will be $1 million, and which is really quite stunning. And so 10x in 5 to 7 years, I mean, even if you only put 10% in that, and if the rest of your portfolio doesn't do particularly well, that really saved your bacon. And the gold Bitcoin debate, I mean, a lot of that goes to how much volatility can you handle. I have a lot of clients, many of them are older, and you're 75, 80 years old. You don't want to put your money in an asset that can go down 80%. I mean, that's scary, right? If you needed to sell it when it's down 80%, you don't want to sell it. And in your time window, when you're in your late 80s, it may not, you don't have another 30 years to live, probably. So many of those people who want to protect themselves against debasement are in gold, and that's great. That's where they should be, because I mean, the biggest drawdown on gold ever in the last 100 plus years was like 30% coming off the 1980 peak. And generally speaking, drawdowns are much less than even 10%. And, about 60% of the time gold goes up in any given year. So it's been a much more stable form of sound money. Now, for that stability, you sacrifice all the upside because, Bitcoin's up X and gold's up 2X or something. I mean, it's not, and that's just because there's not a new adoption curve on gold. It's been around 5,000 years. Everybody knows it's money. You don't have new people rushing into gold. Whereas you have, and there's some nice charts in the book about this, where you have some really nice indicators that we're kind of at the tipping point for Bitcoin. I mean, I think you'd be hard pressed to find people around the world who aren't aware that Bitcoin exists. And so now they've just got to get from being aware that it exists to, oh my God, I really need some of this because this monetary debasement problem is not going away.
Do you think that the cycle is going to go quite a lot higher based on the big print?
Yeah, I do. I think the big print, my projection is the big print occurs in 2 years or less. I hope I'm not wrong about that. I think it's going to have to, just because of the math as I see it. And yes, I think this cycle goes a lot higher. How high? I just don't know. The power law, I use the power law as kind of my downside case. I think we'll at least go as high as the power law, which shows us, kind of being in the couple 100,000 on this cycle in a year or two. And frankly, it could go a lot higher. I mean, Samson Mao may be right. Maybe it goes to 1 million. I think we will, like all models, we will break this model, and it'll exceed expectations. But when that occurs, I just don't know. But it could happen fairly quickly, and there could be a real whoosh to the upside, and suddenly it's at 700 or something. I just don't know. But again, that's a good problem if that occurs. And if you're there, you'll benefit from it, and and if you're not, you'll have regret that you were aware of it, but you didn't get some.
And in the book, you also show the chart Bitcoin versus real estate, which I think is a great chart.
Yeah, right. Yeah.
And that's always a good one, because people often invest in real estate instead of Bitcoin, but in the long run, everything is falling when priced in Bitcoin.
Absolutely. Well, that's exactly right. I mean, it's the apex predator, as Michael says. But yeah, I mean, look, real estate's not a terrible investment. They can't print it. There's a limited supply of it. And a lot of people have been storing wealth there for years and years and years. The problem, as I point out in the book, I think the biggest problem with this is they can tax it, and real estate taxes have just gotten out of control. And in the olden days, you could own a piece of real estate. The taxes were very low, so you had an asset that couldn't be replaced without much carrying cost, and that's changed. Yeah, I mean, in Bitcoin terms, the price of everything is going down. And again, a point I should make, Paul, and I know you're aware of it, maybe not all the listeners are, it's just how unusual, unique, and rare this thing is. It's a perfectly inelastic commodity. The supply can't be changed. The supply is 21 million. That's it. We're done. And we're not at 21 yet, but we're climbing there slowly, asymptotically. And no
But
matter
you
how much.
can't touch it, Larry.
What's that?
You can't touch it.
You can't, yeah. Well, that's right. You can't touch it. You can't feel it. But as Lynn says, and I believe it's true. I mean, money's just a ledger. It's always been a ledger. I mean, the money in your bank account, you get online, you see it. That's just a digital entry. I mean, we're well beyond the stage where people use cash for transactions, or certainly long beyond the stage where people use coins for, gold coins for transactions. So yeah, to me, it's a very unique thing. Yeah.
It's the one thing you can really own too, because real estate, there's also the managing. I'm in real estate myself. Managing the property is quite a big effort.
Yeah.
And then if you don't pay your taxes, property's no longer yours, right?
That's exactly right. They've got a first claim on it. So having digital property that, costs nothing to hold, it's just a really, really big idea. I mean, another point the book makes, I think, is an important thing to understand, is that the investing models have gotten broken with these networks. I was trained in traditional investment techniques and investment management techniques, and you look at growth and cash flows and multiples and all the standard, kind of Graham and Dodd sort of stuff. And along come these networks and Metcalfe's law, where, a network grows in value at a square of the number of users that join it. And it's like, whoa. And so suddenly you've got, Amazon with a 215,000% IRR from its IPO, or Google with a 9,000% IRR from its IPO, or Facebook, I don't know, 2 or 3,000, these incredible returns. I mean, General Motors never did that. I mean, General Motors from 1915, when it went public, to, the 60s, it was like a 40 bagger or something, maybe a little higher than that. But that was over the space of, 45, 50 years. I mean, these networks all popped up after 2000. So they're all relatively young, under 20, around 20 years old. And yet they provided returns that are thousands of percent higher than any other business ever. And it's like, whoa, so there's this new investment model based upon Metcalfe's law. And I just don't think a lot of people are kind of getting their heads around that. I don't think they really understand it. And it took me a while to understand it. I mean, I think I talk about in the book how I missed it. I mean, I looked at Amazon a lot of times. Gosh, this thing's growing. This is great. It's not making any money. Hey, I'm supposed to invest in companies that make money. I just didn't see it. I didn't see that he could ultimately make money, once he got all the share of the market. And that the fact that he wasn't making, and he was enabled to do that because ZERP gave him low cost capital. I mean, that wouldn't have happened without ZERP. But setting that aside, the point is that these network businesses, they're just different. They're just really different. And so I miss those. I'm not going to miss the monetary network. And by the way, the monetary network is bigger than all these network businesses. I mean, in other words, money Amazon, yeah, okay, it touches all the stuff. It touches goods and services that Walmart sells, fine. But money touches absolutely everything, And so I think people are going to be absolutely stunned at the price of Bitcoin in the next 20 years. I think they're going to be stunned. And I'm here for it.
Yeah.
I'm totally here for it. It works for me.
You're all in. I love in the book you do talk about some of your investing lessons.
Yeah.
And you said you had a big crash in 2008 and you had a hard time. You have proof of work. You've put in the time and you didn't get everything at the very bottom, but you invested in Bitcoin at a good time. But you put in the time to get to where you are. So I think for everybody getting into Bitcoin now, it's always a good time to get in Bitcoin.
Well, there's never a bad time, and you can decide, am I going to buy it now or am I going to pay more and buy it later? And it's your choice. I mean, yeah, I mean, look, I've been a sound money advocate for a long time, and that's why, I retweeted this morning. I do feel like, some higher power kind of tapped me on the shoulder and said, hey, You ought to write about this because you've got a voice that might be different than I can just bring. It was kind of like a lot of things just lined up, in terms of the stars. And I felt, and I talked to a woman, a very nice woman, who said she would help me ghostwrite it. And I ended up not working with her, although I liked her a lot. And she said, Larry, books can change the world. And that really stuck with me. I was like, she's right. And she's really right. And I felt like I had a unique perspective because I've been at this shit for a long, long time. And I've taken my licks, and I've been wrong plenty, but it's now it's working, and I'm pretty sure I'm right, and the market's agreeing with me on that. And so I just want to try to help most normal people who don't spend their life in this area, who don't focus on this, who are doing what they should be doing, which is working hard, raising their families, contributing to society, but they don't understand why it's so hard, because they don't understand that they're being drained through this fiat system. And yeah, I get it, it's hard, you may not understand it, but here's one guy's explanation of it, and then one guy's prescription for how to deal with it.
If they read the book, they will understand.
Hope so. That's the goal.
Yeah. Tell us a little bit about that experience in 2008, because it changed a lot of things for you.
It sure did. Well, look, I was just managing an investment fund, doing what I'd always done, which is growth at a reasonable price. Investing is, in my opinion, the best place to be. You try and find new emerging trends early on. You try and buy them when they're priced reasonably, and then you have a chance to make money as they spread, and as they get more recognized, as the valuations go up. So it's kind of, to me, it's the best risk reward part of the equity investing world. And so I was just doing that. I was watching the housing bubble. I could see it. I knew it was there. I was short the housing stocks, et cetera. And that's another story unto itself, the way they changed the rules and screwed me. But setting that aside, when Wall Street melted down in '08, I was just shocked. I mean, I guess I wasn't shocked that the meltdown was coming, and I probably shouldn't have been shocked with the response, but I was, because the response was just unbelievable. I mean, they very quickly printed $16 trillion of swap lines, bailed out all the banks, and just flooded the system with new money. And they took interest rates to zero, which had only been done once before in the Depression. And then they started QE, which is effectively printing money. More importantly, I looked at it, I said, this is wrong, and this is radically different than what, this isn't capitalism. Capital, by definition, is supposed to earn a rate of return. And so if it doesn't, something's wrong. The capital is worthless. It was kind of like a tautology. So I thought, well, I know what this means. I had some savings. They're going to get debased because they're going to just print all this money. And so it caused me to really evaluate the situation in the macro world, and to pivot from, doing a lot of different growth at a reasonable price investments. I mean, I was doing things in India. I was doing all kinds of things, and focus in on, monetary debasement investments. And of course, the white paper just came out. I didn't know about it. I wasn't focused on it. But if you look at a world of monetary debasement and inflation, the best comparable for that is the 70s, when we had a lot of monetary debasement and inflation. So I studied the 70s, and it turns out the two top performing equity groups were oil and gas and silver and gold mining. And I didn't really understand oil and gas. I didn't want to, dig into that. And it was geopolitical, and you got, the Saudis and all kinds of fun. But I thought I could learn the gold mining business. I could learn the silver mining business. And so I pivoted my fund, really, and we focused exclusively on that area. And it worked quite well for a few years. And then there was a whole series of moves that the other side made that really caused us a lot of pain from 2011 to 2015, which was a very dark period of my life. But, kind of hung on and stuck with it, because I fundamentally knew that the system had to go back to printing money. I just had to wait long enough to be there to see it. So, and then, now it's slowly but surely turned. And now we're in full-fledged print mode. Paul, it's going to be amazing what's going to happen here. I mean, they're just going to have to print so much money on the next one. It's going to blow everyone's mind. And that's, by the way, that's the definition of when hyperinflation occurs. Hyperinflations occur when everybody comes to the conclusion, you know what, they can never stop printing money. They can't. This is what leads to what we call Gresham's law, which is people say, get me out of the money. Okay, yeah, I got paid $1,000. I'm not going to put the $1,000 in the bank. I'm going to go buy something, real estate or gold or silver or Bitcoin or even food, or something that I know will have tangible value, because I know that same thing in a year's time will cost more, a lot more. The currency gets abandoned when a quorum of the people realize they can never stop printing the currency. And so I kind of think that's what we have coming in our direction. Yeah. So, it's a sad state of affairs, but it is what it is. The bright state of affairs is we got a solution. And, I'm very happy and comfortable and positive about where we're going and how it's going to get so much better on the other side of this thing when we just solve this problem. So that's the good news. But we can't stick our head in the sand on the bad news. I mean, the bad news is there. It's real. And the math is just bearing down on us.
So they're going to have to print money to pay the debt. That's the big.
Exactly right.
In the book, you also mention the blockchain trilemma from Jeff Booth, which is why Bitcoin and not some of those other altcoins.
Yeah, and this is a very important point that I like to try and make. And I deal with a lot of people who don't know anything about Bitcoin or crypto, and they very quickly and rightly come to the conclusion that it's all fraud because they look at Sam Bankman-Fried, they look at all these pump and dump coins, they look at all the noise in crypto, and that obscures the fundamental technological development that is Bitcoin. I mean, with Bitcoin, what happened? Bitcoin is an invention. First and foremost, it's not number go up. Bitcoin is actually an invention. What did they invent? I mean, it's like the printing press, it's like the airplane, it's like the telegraph, it's like a cell phone. It's an invention. What they invented was provable, immutable digital scarcity. They created something that there's a fixed supply of that cannot be messed with in any way, shape, or form. And they distributed, the network such that no one could control it, and they made it fair. And that's an enormous, enormous change and development that I don't think most people have come to grips with how important it is. All of the other cryptos do not have those characteristics. They all are different. Bitcoin, I rocked the ChatGPT the other day. ChatGPT told me it's like $40 billion invested in the Bitcoin mining infrastructure. How are you going to replace that? How are you going to compete with that? I mean, this is the leading digital secure network in the world by orders of magnitude, several orders of magnitude compared to anything else. And they solved a problem that could not be solved until Satoshi or these Satoshis, if it was a group of them, put together the software that is Bitcoin, that underlies the Bitcoin network. And so it's unique. It's extremely unique. And the other cryptos aren't. And so I get very frustrated when people put Bitcoin in the crypto bucket, and because it doesn't belong there. It's an invention. Cryptos are, the trilemma that you referred to is you can go for security, you can go for speed, or you can go for immutability, I guess, which is partly security. If you want to have security, you've got to sacrifice something, and that is speed. And so a block every 10 minutes, 4,000 transactions. I mean, obviously, the base layer is not going to compete with MasterCard, but there will be layers built on top of the base. And most importantly, money needs to be sound, and it needs to have a fixed supply of measurement, or else people can't cooperate correctly. And as a result of that, problems occur. And Bitcoin is a form of money where you can't mess with it. And so people can cooperate knowing that base layer is not going to deflect or be diluted. And that's just an enormous difference and enormously important. No other form of money has that, really. And for thousands of years, I mean, I've said this before, we've got 10,000 tons of gold exist in the world. Most of it's still around, unless it got sank in a shipwreck or something. But, we add 1.7% to that supply every year. So in something just under 60 years, we'll have twice as much gold above ground if we continue mining at the same rate. So every form of money before Bitcoin had dilution, every single one. And Bitcoin does not suffer from dilution. Or it does, but it's modest as we approach the 21 million cap. And after 2140, it will not suffer from it at all.
Yeah. Did your conviction go up after writing this book?
It did. I mean, my conviction was pretty high. But there were several things that kind of became clearer to me as I wrote it, because I kind of put them down on paper and I was like, oh, yeah. I mean, in particular, that investing model change really struck me like a ton of bricks. I mean, when I went and I Googled how well these other network businesses have performed, and I just thought to myself, hang on a second, this is crazy. This has never existed before. There was pre the internet, there were never any companies that gained this much value this fast, ever. This is new. It's different. completely different. And so, people say, well, there's nothing new under the sun. Well, there is. I was with a monetary guy, respected monetary guy, and I said, Bitcoin is emerging as money. And he said, yeah, call me back when it's got 1,000 years of history under its belt. And I said to him, hang on a second. You mean to tell me that, air flight got invented and you want 1,000 years of history of air flight before you trust it? I mean, what I'm saying? I mean, it's like, it's different. It's just an invention. And now that we have it, things are different. So, and I'm not going to have to wait 1,000 years to know that Bitcoin's the right form of money. I mean, in the early days, it was riskier and there was a lot of fear by me and others that, technology wouldn't work. I mean, in fact, I missed it. I was aware of it like in 09 or 10. I guess 10 when it started trading, when the pizza transaction happened, I heard about it. I thought to myself, these things have failed. There have been 5 experiments, similar ones, and they all failed. And so I did the stupid mental heuristic of thinking, all right, this is going to fail just like those other ones did. And then I went to $100 and I thought, well, shit, maybe it's not going to fail. And then eventually I got around to buying it. But people have to think of it in terms of it being a technical development, technical innovation.
Yeah. Well, I really appreciate you being on the show, Larry, and I am going to quote you and post links to the books below. But I love this quote in the book. It says, Bitcoin is more than just an asset. It's a statement of freedom, sovereignty, and resilience in a centralized world.
Absolutely. No, that's right. I mean, and that's, the use cases, the poor people that it's helped. I mean, one of my favorite parts of the book is the Alex Gladstein section where he talks about all the third world use cases. I mean, you got these guys like Gates and Buffett and, others saying it's rat poison. I mean, screw them. I mean, that's fine. They're rich. They've gotten rich off a fiat system that rewards their kind of behavior. Everybody else in the world's had to suffer with, bad money and they've really gotten hurt. And that's not right. I mean, yeah, look, I won't hide it. I'm here for number go up, and I'm trying to protect my family and grow my assets because that's just a sensible thing for any human being to do. But what gives me great excitement about this is how it's going to make the world a better place. I mean, there are also big sections of the book where I talk about how I think it'll defund war, which I think is one of mankind's greatest problems. If governments aren't able to print money to pay for war, which is historically, by the way, how they've paid for every single war, because no populist would ever let them tax you at 100%. They would revolt. So what do? They just, print the money and pay for the war. And, you pay for it, it's like an installment plan. You pay for it later. World War I, they did it. And, they basically issued war bonds and the Fed monetized them by, gave the banks a subsidy. The banks could borrow at 3% and get a 3.5% yield on that bond. So they were getting 50 basis points for free. And so they paid for World War I, via monetary dilution. But guess what? Between the start of World War I and 1920, the price level doubled. And the book talks about that, all the bad things that happened to society. The Ku Klux Klan came in, Charles Ponzi ran his Ponzi scheme. Chicago White Sox became the Black Sox as they cheated. I mean, when you have monetary debasement, really it damages a society. It really does. It hurts people. They get angry, understandably so. And that's what we're going through right now. That's why politics has been so divisive, because people are hurting and they don't know who to blame and they don't understand the cause of the hurt. And again, that was the mission of the book. Look, here's why you're getting hurt. It's the bad news. Here's what you can do about it. It's the good news. It's pretty simple.
Yep. And it really did cover everything. Yeah, I think by including so many different people from the Bitcoin space in it, we're all going to be promoting the books.
Well, I appreciate that. I mean, as I said earlier, this is a team effort. I channeled Bitcoiners through my keyboard, and I'm a good conductor and I'm a decent organizer of facts and analysis, and that's my skill. And so I brought that skill to bear on a lot of work that have been done by a lot of other people. And these aren't necessarily original thoughts on my part, but I think I've organized them in a way that will help all those other people in the country that don't understand this to see it more clearly and understand it, and maybe do things that will protect them in the future and lead us toward a better system for everybody.
Yeah. Well, let's make the book go viral.
Well, that's the idea. Bitcoin fixes this, right? It's what I say. Fix the money, fix the world.
Bitcoin is a better world. It's
There's no
world.
doubt. There's absolutely no doubt. And the great news, Paul, is it's coming either way. I mean, because human beings will gravitate towards the right solution. I mean, with bumps and over time. And all I try to do with the book is accelerate that. I just want it to happen sooner rather than later, because
Yeah.
it's broken now, right?
Patience. It's not easy for me.
No, we got to have a long time preference, and it's going to take a while, and there'll be more bumps. Look, there were times when I was worried. I mean, I bought it in 2017 at 15,000. I watched it go to 9 or 10, then I watched it go to 4, and I thought, Jesus, what am I doing here? Is this right? I bought more, but I wasn't sure. I mean, I didn't know, but now I think we put our shoulder to the wheel. I mean, the wheel's rolling, and I want to get the wheel rolling faster, but it's rolling, it's happening, and so I'm very highly confident now that we're going to win, and that this is going to be money in 10 years or 20 years. It just is. So.
Well, thank you so much, Larry.
Oh, thank you, Paul. I always enjoy talking to you. The monetary system is the Titanic, okay? And that may be extreme, but let's just hypothetically, as a model, say the monetary system is the Titanic, and gold and Bitcoin are the lifeboats. So I got a seat in the lifeboat for $400 in my first Bitcoin purchase, or $50,000 with my last Bitcoin purchase. Now it's $100,000 to you. What do you want to do? You want to stay in fiat, or you want to buy that seat?